All right, guys, welcome back to another Foreman's Digital video. So as you see, this is Euro USD pair that we're looking at. So I'm gonna give you an update on what happened from this week. So as you know, 2 weeks ago, I gave analysis on what I thought Euro USD was going to do. So as you can see, right, we had liquidity getting taken out here, right, at first, and then we had liquidity getting taken down here. So based off the next order flow, right, once price came back up to here, took out the high of this, right, but closed within this, making equal highs. We know, okay, hey, the next order flow was what to take out the low of this, because of why we had all these imbalances that has to get filled back out. So that's the daily time frame, and y'all already know when looking at the overall direction, we look at the daily time frame, the weekly and the monthly. That is our overall direction. Now, of course, we don't look at the weekly and monthly every day, because the weekly and monthly take a little bit more time to play out. So the daily is what you're gonna be looking at the most. So when I saw that the liquidity got taken out by this wick right here, closing down, continue making equal highs, right? This is off the daily. I know, okay, hey, it has to come down. It has to come down and take this out, right? I'll show you my Discord, where I have posts on my Discord as well, before even the Ukraine and Russian news even hit. I didn't even expect that to even happen, to be honest. But by the Ukraine and Russia, by them having war, that even made my setup even more valid. But I wasn't even expecting that to even happen. But so like I said, we had liquidity taken out here, then liquidity taken out below, and then price came back up, making equal highs. So we know our overall directions for price to come down. So what did that mean on our lower time frames? When we're looking at our lower time frames, when we got over our direction, your next step is the only time frames that I'm looking at. I'm gonna scroll down to the 4 hour. If I don't see a step on the 4 hour, then guess what I'm gonna scroll down next? I'm gonna scroll down to the hour. If I don't see anything on the hour, the next time frame I'm gonna scroll down to is the 15 minute. If I don't see anything on the 15 minute, then I'm scroll down to the 5 minute. If I don't see anything on the 5 minute, I'm scrolling down to the 1 minute. These are the 5 time frames that I'm scrolling down to see where I can see a setup best at. I don't mirror off of just one time frame. I might not even see the setup on daily. I might see a setup on a 4 hour and work my way down and see if I find a setup. So that's why I always tell y'all, don't just mirror one time frame. I'm gonna show y'all an example of what I mean by that. So as we see, right, we see this right here, this Euro USD, and we look at DXY as our confirmation, right? So let's compare these charts, right? Divergence. I told y'all I didn't do a live class session this weekend, so I told y'all I was gonna go over a little bit of divergence. So I want to go over a little bit how we use divergence to confirm my direction. Divergence is a very powerful tool to me, like the most powerful tool ever to use if done properly. A lot of people like to use indicators to confirm their divergence. Me personally, I don't like using indicators personally. So here's a divergence. And this, and this is DXY. The reason why I use DXY, because Euro USD always do the opposite of what DXY do. Why? Because obviously the main base is Euro, so it's versus the US dollar. So it's only common sense to use DXY as our comparison of the charts. So when we look at DXY, right, this is dollar index, a colorful one. This Euro USD, this DXY. So if you notice, right, what do we have from here to here? We have what? A shift in market structure, right? This is very key. Let's mark this real quick so I can see what I'm talking about. This is a divergence right here. This is a divergence indicating that, okay, hey, price, we have what? Price came down. The same thing that did here. The only difference, it made it fell low. So what? Price took a low of this liquidity out, came up to the high of this above, and then what? Came down, making it fell low. Same here, but it made equal lows there. It took the liquidity out the top, then took the liquidity out below, and then came up and took liquidity out, but then the volume closed within it, making equal highs. So just by looking at this divergence, oh, I said people be overthinking it. Just by looking at this right here, this is my cue, my sign that okay, hey, the dollar index is going up. Where it's going up to is going to take the high of this out. Euro USD is going to take the low of this out. Just based on looking at this alone. I think that's pretty easy to understand when looking at divergence. Divergence is nothing but just looking at fail highs, fail lows, equal lows. That's it. Now, sometimes you have hidden divergence where it might be like, for example, it could be like it could be this, right? This could be a hidden divergence. Let's say if this didn't make a fail low, let's say this took this out right here, making a lower low, right? But then you got this right here making equal highs. That's considered a hidden divergence. So even if this had made a lower low, right? This was still taking out this low right here, right? And this made equal highs, right? This was still because that would still consider hidden divergence for price to go up, right? So now we know, okay, hey, we have our confirmation off of DSY because DSY is the first pair we look at to confirm all our other pairs, as well as the interest, but we can tell later on another video. So let's get off of this. Now you understand we confirm our pair with DSY. So now we have our confirmations, right? Also, here's another confirmation. That I let's see, where is that? I think I deleted. Anyways, so now you have your divergence set, right? So now, okay, what does it mean for lower time frames? We're only looking at bearish setups. We're not looking for no buy setups. We're looking for bearish setups because we know, okay, hey, price is going down, and we know price is overall going down. Then it's going to be only common sense to look for bearish setups. Why? Because guess what? It's going to be more probability for your play to play out because that's what the true direction is going into. So let's go down to the 4 hour first. So we go down to the 4 hour, right? We're going down to the hour because we go to the most steps in the hour, to be honest. This is what I've been looking at all week, well, actually for the past 2 weeks, to be honest. So it all starts with this right here. So y'all can see that double bottom, right? If we go to the 2 hour, you see? This is that same. Y'all have to be able to train your eyes to be able to see what you see on the delete this. Let me clear some of this stuff out so you can be able to see it. So y'all have to be able to train your eyes to be able to see what you see on a daily time frame. It's very important. If y'all look, this is that same double top right here. From this point going down to here. That's that same double top that we saw on the daily. Looking at the hour. So let's zoom back in. So we know, okay, hey, we only looking for bearish setups. So what happened? This all I made videos on all this happening, but I just go over it again, a little update. So what? We have liquidity getting taken out here because we all know, okay, now we're looking for our bearish setups. What are our bearish setups? When we're looking for our setups, we only looking for order blocks, mitigation blocks, liquidity voids. Them are 3 main setups. So after a high get taken out or we see a rejection block, what is a rejection block? A rejection block is when the high is not taken out, but take up the volume of it. So that's called a rejection block. So after a high or rejection block is going forward, we want to start looking for an order block, a mitigation block, or a liquidity void. Them are our 3 steps we want to look for. So in this case, we had a nice order block set up. Why? Because we had contraction, and then we had liquidity getting taken out, and then what happened after that? The low of this up candle got taken out right here. So that's our confirmation. Our entry is on this pullback right here. So when price did that, we got entry on a pullback. Take profit happen here. take profit hit. So obviously we have a lot of contractions going on, showing that price did not want to go down right away. So what did it do instead? It built up a whole liquidity, right? And then what happened? It got taken out by this. But here was the key that you supposed to pay attention to. The key was this. That once it did that, right? What happened? They both closed within this. So this was a sign that price was what was going to take out what the high of this. Once the high of this got taken out, right? Guess what that was? There goes another bearish setup we can look at. And I already did a video on this whole move right here. On this whole move. You go to the 5 minute. Just watch, if you haven't watched that previous video, pretty much we scroll down. Once the high got taken out, we scroll down to the 5 minute time frame. And there was a shift in market structure. Watch my previous video on that and you'll see. So I'm trying to go down to the current price. So after all that happened, right, price came down, right, and we all was expecting for what, this void to get filled right here. But it was a lot of people who thought this void was going to get filled and bounce back and take the high of this out. But it wasn't, because why? We already know on a daily time frame where price really trying to go. That's another thing. The daily time frame will prevent you from getting manipulated. So we scroll, right. So price finally got filled, right, and then what? When price got filled, look what this candle did right here. Price came down and closed within this, and it never came back up. But then what? Followed by this up candle right here, taking out the high of this. What happened? That right here is my sign that, okay, hey, price is going to go up. That's my sign right there. We know for a fact, okay, hey, price has to go up from this point right here. So, this could I would say this is the only part that would have been good to buy, that was worth buying. But the rest is not worth buying. If you was going to buy, this would probably be the only part that was worth buying, because why? This void got filled, and what happened? It had to come. What's the next order flow? It had to come fill this void right here where this line is at. Once that got filled, what happened? It was back on its true direction. But it only came down to fill what, this void right here. So I probably said this was the only area that was worth buying. So in this case, how would have bought this, right? Price came down, taking the low of this out. We had this up counter right here. You'll wait for price tap back in on top right here. Your entry would have been right on this counter right here. There's other ways you could have got this entry in, probably on a lower time frame. You probably could have found a different entry for this. Or you could have just did a buy stop for price to get above here. Once price got above here, right, it would have been straight profit going up. Take profit would have been right here where this line is at to fill this void. So once void, but just based off of daily, if we only look for bearish setups, then we wouldn't even buy this. But this is the only exception. But it's for more experienced traders who know when to buy and sell. This would be my only exception right here going into this. Other than that, we're looking for sell setups. So now back to current price. Right now we're right here, right? Price go through all this phase, right? So this void came down. Then we had another void that got another void right here, came down. And what, price came back, filled this void, right? Build another contraction, taking out this low. And then what happened? What happened? Price came back up, taking a high of this liquidity out right here as a turtle soup pattern. As y'all see, this is a turtle soup. And then what? Price came down. So why it's considered an order block? Because what? The high of this got taken out, which was liquidity. And then what? It came down, showing signs that it want to go down. What? And then what? It took the low of this up candle right here as an order block. And then what? Price tapped right back into this. And then what? Came right down. That's an order block. No matter how you see it, that's an order block. An order block is nothing but when the queen. These are my exceptions of an order block. Is when either a low get taken out and then the up. I'll show you that too, because I have a step on that. But this is an example of an order block. We have the high that's getting taken out, right? We had this void get filled, and it built a contraction, which was a liquidity pool. And then what? We had the high that's getting taken out as a turtle soup pattern. Where I told y'all, either from a turtle soup or rejection blocks, we want to start looking for what? Our setups. So after liquidity got taken out, where's the sign? Okay, that price came down. So, and this is on our time frame, so you have plenty of time to what? I'll probably say like once it's like 10 minutes left before the candle close. Okay, it already closed, but I know, okay, hey, price gonna retrace back. Your entry would be right here. Let's put a line here. See what I'm talking about. Let's put a line here. And if you notice, price never, and all this is off of understanding what the daily time frame was going to do. That's why I say it's very important to be able to see what you see on a daily on lower time frames. So what? It's kind of cricket a little bit to straighten out. So what? Price came to the liquidity out from here, right? And then look how it closed. It closed within this. That's a change. That's a change of character in price. Let me know that hey, price about to drop. And then what was my confirmation? Price took the low of this up candle. That's it's literally clearly an order block setup. And then what? Price tapped back in by this up candle right here. If y'all look closely, price tapped back in by this up candle. Your take profit would have been below here, or you could have kept it going. You could have trailed stop loss. Since we know price can go lower, you could have trailed stop loss. And then what? You had another entry or price came right back to this same order block. So you had two different entries you could have got in. And then what? After that, we had what? A shift in market structure. So whenever I do my shift in market structure and I'm doing my mitigation blocks, what do? I do it off the last down candle. I don't do it off of this area right here. I do it off the last down candle. So our entry would have been right here. Let's put a line here so you can see this too as well. My entry would have been right here. Now you had a small little drawback, but that's fine. Not every trade is gonna be a sniper entry. As long as your drawbacks are small, that's fine. This would have been a small drawback. Entry would have been right here on these two candles. One of these entries would have got you in, and this would have been straight. Your take profit would have been right below here. All these are bearish setups that we're looking for. And then what happened? So now that we know our target is based off the daily, we know our target was here, right where this white line at. The same white line that y'all see, if we go to the daily again, if we go to the daily, we know our target was right here. Take a load of this out. Now that happened, right, guess what? When that happened, right, you can start looking for buy setups. Because why? It took a major low out. And remember I told y'all, every time a low get taken out, what do you want to start looking for? You want to start looking for what? Either an order block, a mitigation block, or a liquidity void setup. And usually when a liquidity void gets set up, it's usually followed by a contraction before it just shoot out. Liquidity void is when it's in a range and all of a sudden it just shoot out. So guess what we have? This is considered an order block on the hour time frame. Why? Because what? We have our daily low getting taken out, right? A lot of people will know that. But we have our daily low getting taken out, which is major. And then what? We had the high of this candle right here. Let's put a mark right here. So we had a high of this candle right here. High of this candle took out what? The high of the down close candle. So our entry would have been right on this candle, right on this up candle that tapped right back into it. So that's why I told y'all, like on the last 10 minutes of the candle is about to close. Okay, boom. I know for a fact it ain't going below this. We can go ahead and put our order in. So you had 10 minutes, right, to go ahead and put a buy limit order for price to trace back down to this area right here. And your entry would have been right on this candle. Not on a lot of people think order blocks is when, okay, hey, price does something like this and we have to expect a retracement like this. No, that's not how order blocks operate. Your entry would have been right on this candle. As soon as the high gets taken out, you enter right on the retracement of this candle. Why do we know it's gonna work? Because what? A major low just got taken out on a daily time frame. So we know, okay, hey, this is more prone to work. And even if you didn't cut this right, let's go to the 4 hour. On the 4 hour, it'll be a small little move, but We go to the 4 hour. And what do we have here? We have what? We have price came down, close up, showing you signs that it's gonna go up. So what? We would have what? We had a shift in market structure, and what? Our entry would have been right here, right here, and we have this up candle took out the low of this down candle. So our entry would have been right here on this move. You would have had a smaller drawback, but even if you didn't even caught the hour, you could have caught this on the 4 hour. So and all of that is off of just understanding what the daily time frame going to do. All that is part of understanding what order flow is. So now that I hope y'all understand. If y'all getting value in this video, make sure y'all like, subscribe, and hit the notification bell so you can get all notifications when I post my videos. Right? And also join the Discord link. It'll be in the description and in the comments below. So you can join our Discord. Our Discord is free. We do live sessions as well as live trades every now and then, but mainly a live class session for people to learn. And I post my setups so that everybody can see and learn from. I don't give out signals because I just give out my setups. I give my setups and I post my entries. So join the Discord group. It's for serious traders only who's really whether you new and trying to learn, or whether you already have experience, you're trying to get better. This is a group full of serious traders, and it's a community for people that work with other traders and get better at. So let me go a little bit more in depth of Divergence. Because that was the main video was supposed to be about, but I wanted to go over how we was able to understand how this trade was going to operate. I hope that's simple, y'all. I hope that this video is understanding. If you got anything you want to talk about, just post it in the comments and I'll go over it. But it's simple, y'all. Like whenever a high or a low get taken out, or it's a rejection block. Like I said, a rejection block is when it don't take the high out. It just take the volume out. Like for example, this is considered a rejection block because it was the main high right here. It was the main high, and it closed here. That's really considered a rejection block. That was the main high right there. So it's when it don't take a high out, but it takes the volume out. So when those happen, we want to start looking for our setups, which I teach y'all, is the order block, the mitigation block, and the liquidity void. It's that simple. I don't even use fair value gaps. All the other stuff to be using, I only use mitigation blocks, liquidity voids, and order blocks. That's it. I wait for either a low or high get taken out, or I see the volume get taken out. If I see one of those two, I'm going to automatically look for my setups. But remember, you have to confirm your direction by the daily time frame. Once your direction is confirmed, then that's when you want to start going into these kind of phases. So if the daily telling you this is going to be a bearish momentum, then guess what? You only want to look for bearish setups, and you see how all this played out. Let's go back to the hour real quick. Like all these setups. So this is about just from this whole down move, from this whole entire down move, right? From when it started, you had this order block set up. That was one. This void that got filled. Oh, wait, no, that was back here. The move really started back here. You had this order block. That was one setup. We would call that trade. You had this turtle soup pattern followed by a shift in mitigation on a 5-minute time frame for entry to get up top right here. That's two right there. You had this. You had once take profit came in, you could have bought here. That's only an exception. And then you had what? Once the void got filled, entry here for a setup, and then you had another void within that, entry here. So just you have more selling opportunity than anything. And then what? We had another one, turtle soup pattern to what? Sell off, along with the order block, followed by a shift in market structure. You had all them setups. That would have been a most probability to win. And these are all trades that I took that I've been watching for the past 2 weeks. So this is important of understanding order flow. The only order flow is nothing but price going from low liquidity run to high liquidity run. If you don't know what that is, then you can go watch my previous videos. So let's go back on a little bit. I'm gonna touch up on the last little bit on Divergence real quick. Go back to the daily. So all these examples of divergence, like for example, here's another example. So I want to show y'all real quick. Like right here, we had price came up right here. All right, there was a rejection block. It took the volume out, but not the high out. And then what we had a shift in market structure on this right here. This right here, like we know that hey, price is going to go up. All divergence is nothing but highs and lows getting taken out in equal highs. That's it. When you start keeping it that simple, you're starting to say, okay, hey, yeah, I get it. I get it. Also to help you out for newbies, if y'all need a divergence indicator, this is the only divergence indicator that I do accept on TradingView. Just give y'all some tips for people who do love indicators, because I use indicators myself still. I usually have one right here. Let me reset it. Don't know why it's not up here, but it's usually a divergence indicator I have. I thought I saved. Okay, I'll type back in. So just type in divergence right here. I'm going to save it. Click it. Okay, so it is up there. So I don't know why it's not popping up. I ain't paying for the monthly fees. I don't know why it's not popping up. I usually have. Oh, is this it? Hold on. Let me refresh it. Let me close it out. Let me close all this out. Go back to my. Okay, I know it's here. Come over to scroll through. Okay, I can't get it to pop up. Dang, really want to get this to pop up. Hold on, y'all. So I usually have at least about a third one on here. It's usually at the bottom. Let me do this instead. Hold on. So let me see if I can get this to pop up. All right, it should pop up on here now. Let's refresh this. All right, we're gonna get a couple minutes for it to pop up, but just show you my Discord group real quick. So here's the watch list. Gonna show y'all. Okay, hey, there was your AUD played out perfect like how I said it was going to. There you go right here, Euro USD. So I can see the date February 20th, 2022, 8:25 p.m. that had posted way before news came out. expecting price to take the low out. So as you can see, that's what happened right there. So join Discord. Like I said, as you can see, we have people who's in the group. People who post their. I give out notes, homework as well. Go to the notes for homework section. These are some good notes that I give out that y'all can be able to go over, take, and save yourself. They help y'all be able to know how to find steps and everything. So it's a great community for anybody who can join. Let's see if this popped up yet while we at it. We'll close it out. Close that out. Let's see. Drum roll, drum roll. Dang, it still hasn't popped up yet. Okay. But let's turn this over. Let's see if I can find it this way. It's still not popping up. Weird. I'm trying to find this Divergence. Anyway, if y'all go on, I create a separate video, quick video, but if y'all go on TradingView, type in Divergence, click the first one, you will see it. Just trying to see why it's not popping up on here. Yeah, because it's usually like somewhere at the bottom where I'm able to, there you go. So look, as you can see, right, let's go back down to the daily. So as you can see, this is the only indicator that I would use as an exception right here. I did all this just to get this right here. This is the only one that is an exception. Because why? It is helpful. So as you see, it's telling you, okay, we have a divergence, a bearish divergence right here of equal highs. So therefore, it's telling you to sell right here. It's telling you that we have I don't know why it said it right here. So as you see, in some cases, it's kind of stupid, but it is the daily time frame. But you can still use this like for your advantage. Like for example, right here. Right here, right, we have price taking the high of this out, right? This is considered hidden divergence because right, the high of this guy, I don't know why I didn't show it here, but we had the high of this getting taken out, right? Meanwhile, this was right here was making equal lows. So because the high of this got taken out down here, making higher highs on this, and then this made equal lows, then we know, okay, hey, this right here is a hidden divergence for price to continue to go down. It don't show that as a hidden divergence. It should have. That's why I say it's not perfect. But I do think this is a good tool that you can use, indicator, if y'all was going to use indicator divergence. Other than that, I see y'all, this video's getting long. So other than that, we're probably going more double divergence again on a part 2. So other than that, I'll see y'all in the next video. Till then, peace and good luck on this next trade.